All right. Hey, welcome traders. We're getting ready to start here. This is the followmetrades.com live trading room for the FOMC meeting announcement. So thanks for coming here and looking forward to it. We got about a half an hour before the report comes out, but we wanted to be here and be ready. So again, welcome and good morning, good afternoon, good evening, wherever you're calling in from. Please make note, in the Zoom webinar platform, there is a chat box, and you can type in questions or comments as we go. And I definitely want to make this interactive and hear your comments, hear your questions. And later in the session, I'll be willing to analyze any stock trade that you're interested in. So make sure you can locate that chat box and do that by, go ahead and type in where you're calling in from, what city, what state, what country. We usually get people from all over the world calling in. Then we got Michael from Miami. Good morning, or good afternoon to you, Michael. Denver, PA, Atlanta, Georgia, Spain. Hey, Darren. Albuquerque, New Mexico, Boston, Mass, UK, Terry. Welcome. And the other Dean from Gig Harbor, just up the road from me. I'm in Olympia, Washington, just south of Seattle. Leesburg, Georgia, Tulsa. Ahmedabad, India, Amit, awesome. New Paltz, New York, Vancouver, Canada. Just up the road, Sam, Vancouver, BC. Well, very good. Tennessee, California, JP. Which one? We're going to have 3 Californias, right? I saw the news. There's a referendum that's got enough signatures, it sounds like, to split California into 3 states. So see if that happens. That would be something else. Sounds like the probability of that's pretty low. All right, looks like we got more folks logging in. Hey, welcome. This is the followmetrades.com FOMC announcement trading room. If that's what you're expecting, you're in the right place. If not, this could be the wrong airplane. Yeah, we're going to we're going to analyze the market. And, I don't know what the short-term reaction will be, but I'm going to get your opinion and we'll see. And we'll definitely analyze the overall market, the bigger trend here as we get going. Hey, Al, good to have you calling in as well. This is being recorded. And so if there's something that you want to go back and check out later, you definitely are going to be able to do that. All right, well, let's kick this thing off. Just a quick disclaimer and note here that everything presented in this session, in this trading room, is for education information purposes only. Yeah, I'm a trader. I'm not a financial advisor. I'm not giving financial advice. I don't know your situation. So I share my analysis. I'm going to be sharing some trade ideas, some trades that I'm getting ready to take, some that I'm actually in. We might find a few more. But whether anyone places an order, trade, participates in the market, that's strictly the decision of each individual. Only you know what's appropriate for you. So I share what I'm doing. Each person makes their own decision. Everything presented here is for education information purposes. And many of you, are maybe new. You haven't been in a session with me before. You don't know who I am. So I thought I'd do a quick introduction. So hi, I'm Dean. I'm Dean Jenkins, founder of followmetrades.com. And, I'm a trader. I've been trading and investing for over 25 years. And I really started when I was working for Intel Corporation, and they gave us stock and employee stock purchase and incentive options. And boy, Intel, I joined in '93, and for up until 2000, it split and doubled like clockwork every 2 years. And I began to see the power of you can make some money in the market. And during that time, I went and got my MBA from the University of Washington. And for quite a while, I was a fundamental trader, analyzing financial statements and earnings and, company strategy and all this kind of stuff. Kind of got mixed results. And I traded through the whole dot-com rise and had some winners, had some losers, but mixed results, and I got pretty frustrated and then totally gave up on the market in 2007. Pure luck, absolutely pure luck at that point. So I just went to cash for a while, and then the market crashed and I didn't get hurt. Hey, Thomas is calling in from Sacramento. Hey, welcome. So I couldn't stay out of the market long. That was too intriguing, right? And but I got interested. I got back in 2009. I actually did really well. I got into a couple of really good trades. I got into Bank of America at $5, went to 12, but I was stressed out even in winning trades because I didn't have a trading plan. Really, I didn't understand technical trading or trade management very well. It's one of the things earlier I'd been frustrated with is, you got a winning trade. What do you do? When do you get out? You got a losing trade. When do you get out? So I got really interested in technical trading about 8 years ago, 2010. And I made every mistake. I bought every indicator, looking for that magic thing. And of course, there is no magic. It's hard work trading successfully. I had a good mentor, Bennett McDowell from traderscoach.com. And in 2012, about 6 years ago, I finally settled on the current system that I'm trading with. And I started getting consistent profits. And in 2015, I launched my company, FollowMeTrades.com, where I share the trades because ultimately I was being successful. I was part of some forums and people, hey, you want to let us know before you take a trade? Looks like you got something going on there. And so I started this service, and that's really my flagship service, is a stock advisory service where I just tell people, hey, I'm going to take this trade. Here's the price I'm getting in, the stop, the target, and how I'm going to manage it. And now I've got a good number of customers to follow along, launched a trading room as part of that. So that's the story. That's who I am. In this session, here's what we're going to do. I'm going to review. I do have a trade setup for news events. You want to be careful in the market. When there's big news coming, if you're trading oil, the oil inventory report, if you're trading, indexes or stocks in the indexes, and there's a big news event like today, like the FOMC announcement, you want to be aware of that. And particularly if you're trading intraday, we can get some big moves, and it can go your way or maybe not, right? So I have an intraday trade setup for news events. It happens after the event. I think it's a bad idea to be holding intraday leveraged, futures and stuff into a big event. So we're going to see, I'll explain what the setup is, and we're going to watch the market reaction to the FOMC announcement. We're going to look and see if there's any intraday trade setup there. And if so, we'll demonstrate the trade. And we'll also just trade, I trade primarily larger time frames. I don't currently day trade, but I do have these setups that I'll share. We'll look at some trade setups on larger time frames, and I'll show you a couple of my current favorite trades. I'll share them with you. And you'll leave today with a couple trading ideas. And I'll be happy to analyze any charts, any symbols that you're interested in. I can analyze, futures, Forex, and stocks. Stocks is what I primarily trade, stocks and options. But stick around to the end, and I'll be happy to analyze some of your trade ideas. So, current market situation. We got the FOMC announcement coming out in just over 20 minutes, and there's certainly a lot of expectations and opinions about that. I did a quick Google News search here on FOMC, and hundreds of articles, a lot of digital ink being spilled with people's opinions. Here's Seeking Alpha, and the expectation from most people is that the Fed's going to deliver a 25 basis point rate hike today. But probably what moves the markets more is if they announce what's expected, that's fine. But it's really their forecast about what's going to happen later. So again, a lot of opinions. Bond traders are bracing for major moves. All kinds of stuff going on. And by the way, there's my website. If you haven't seen it, there's my homepage, FollowMeTrades.com. And I mentioned I have a stock advisory service. There's the results year on year, and I believe in complete transparency. You can click on any one of these buttons and see the complete trade details for any given year, and my trade record is audited by a third-party CPA firm, and the reports are listed there. All right, so let's hear your opinion. What do you guys think that the Fed is going to do? What I'm going to do is launch a poll here, and the first one is I'm going to launch it. What do you think? How many basis points do you think the Fed is going to announce today? And I've got, 0, 25, 50, 100, no idea. So go ahead and place your vote. See what you think. And then I'll share those results in a minute. It should be interesting. I'm going to go ahead and turn my camera off. I wanted to say hi, let you see who I was, but now get that out of the way so it's not blocking any part of the screen. Okay, the results are coming in, lots of votes, and there's a huge concentration at 25 basis points. That looks like, oh, we've had a lot of people vote. About half the people in here. We got about 136 people in the room right now, and just about half of them have voted, just over half. We'll give you a few more minutes and we'll share that polling result. Donnie says 20 basis points. Not one of the answers, right? Mark says 25 now and increase 3 this year. I think that's interpreting what you're saying. Looks like the voting is still going on. When it tapers off, I'll go ahead and share the results. We have a clear winner, though, at 25 basis points, overwhelmingly. And Mode, I hope I say your name right, M-O-H-D. Close your position for NU and AU. See how it goes, right? Okay, I'm going to go ahead and end the polling. And now I'm going to share the results. So hopefully you guys can see that result. 85% of the people, 74 people voting, said 25 basis points. So pretty much in line with the overall market expectations. Got a few people saying 50, 100, 0, and a handful with no idea. All right. Looks like no. So if they do something different than 25, there's probably going to be a reaction in the market, huh? All right. Let me kick off another poll now. Let's see if it'll let me. All right. How do you think the S&P 500 is going to react to today's announcement? S&P 500, how's it going to react to the Fed announcement? It's going to be flat. And then there's some choice: mild bullish, moderate bullish, dramatic bullish, bearish. All right, more votes coming in. Appreciate you guys participating. It makes it interesting, right? I'll give you a minute to get your votes in. John's got no idea. Yeah, I should have made that as a choice, huh? Oh, looks like we got a kind of a split opinion here. In statistics, they would call this a bimodal distribution. It's like more people are logging in. Hey, welcome. Glad to have you here. We're just doing some polling here. I don't know what people think is going to happen. We got about 17 minutes before the actual announcement. George says 30 days straight up, all you need to know. Okay, we will see. Give it another minute for the polling, for the votes. We're almost at a... That's why the statisticians don't get invited to the party. There you go, Mitch. And even the statisticians don't like the actuaries, right? They're too geeky even for the statisticians. All right, we got 3 more votes to get to 100. If you're working on it, go ahead and click your button, and then we'll share the results here. This will be interesting. All right, we hit 100. Beautiful. 101. So there it is. Kind of tied. Mildly bullish, moderate bullish, mild bearish. Those are the leaders. So it looks like the most is, oh, I got to share. There we go. Okay, the leader is mild bullish response. Very close behind is moderate bullish, mild bearish. Fair number of people think moderate bearish, dramatic bearish, dramatic bullish. So this is a bimodal distribution. But the leader is clearly a mild bullish reaction. Well, we don't have to wait long. We're going to know, right? Still got Bank of Japan and European Central Bank this week as well. Virginia says, yeah, we do. I think FOMC is the 1,000-pound gorilla at the moment, though. All right. Thanks for sharing your opinion there. That's pretty cool. Good to see. And it's pretty much in line, I think, with what the overall market's expecting. So if the Fed does something unexpected, that would be something altogether different, won't it? Okay, let's take a look at the current market. Take a look at the S&P 500 futures on an intraday timeline. I'm looking at a 10-minute chart. I wouldn't trade intraday on a 10-minute chart, but it does give you kind of a bigger picture than, 1 or 2 minute, stuff like that. So you can see from the overnight session all the way through this morning's open and today, we're sitting here in a range, right? It's a range-bound market. It's going sideways. There's the top. There's the bottom. So we'll see if the news breaks us out of this range. We'll just have to see, huh? Pretty interesting. So let me share a trade setup intraday for a big news event. So here it is. Here's a post-news event setup. So here it is for short, right? So after the initial news comes out, there's typically a big dramatic move. And then after the initial move, there's a retracement. And I look for a Fibonacci retracement. So I just use a simple Fibonacci retracement drawing tool and look for a 38.2 to 61.8 Fibonacci retracement after the initial dramatic move. Then I look for an entry with a low on this short trade, right? It's obviously a bearish move, a bullish retracement. And then when I get a low, lower high, new low, we have a price entry. An aggressive entry here is when the first new low is made. Here is when it takes out the original low. But there's typically, if you get this pattern, you don't always get it. Sometimes it just moves straight. But if you get an initial move and a retracement to a Fibonacci zone, there's typically a pretty good follow through on that initial move. Here's what it looks like on a long trade. So here's the initial move after the news. There's the retracement into a Fibonacci retracement zone, 38.2 to 61.8. Right? Here's the entry, high, higher, low, new high, aggressive entry here, conservative entry at the new high, and the follow through. So that's what it looks like. Okay. We just had this morning, and Noel talk about my charts here in just a second. So here's the oil on a 1-minute chart. We had this morning, the oil inventory report came out. Here was a dramatic move up. Here was the retracement into this Fibonacci retracement zone here. And then we had it channel. We had kind of a nice high, low, new high. So that looked like a pretty good entry. And we got a target just using the Fibonacci extensions of oil getting 67.04 to 67.38. That's channeling again. But there was a nice entry there, and we'll see if it follows through and hits that target. There it is, real time from today's oil inventory report release. Okay. In terms of my chart, that's an intraday futures chart, and again, I'm not primarily day trading. I typically trade off daily or 60-minute charts and trading stocks and options. I use a couple indicators here. I use Ichimoku Cloud. That's this shaded area that you can see. It's shaded, this little thing. It's shaded green, red going down, green going up. And Ichimoku Cloud is similar. This cloud portion of it. There's some other components that I have turned off because I'm really just concerned with this cloud. It's very similar to moving averages. So this white line's a 200-day simple moving average, and then the Ichimoku Cloud is showing some smaller time frame moving averages. The cloud is calculated differently. simple moving average is calculated by the average closing price of some number of bars back. And the Ichimoku cloud takes the average of the highest high, highest low in X number of bars back. And I think that's more accurate. It shows the full price range. And it shows, rather than an absolute level like a simple moving average, it shows a range that is potential support and then potential resistance. What I like to see, so I combine this with Elliott wave. And let me show you a trade that has a pretty clear Elliott wave setup that I'm in right now. This is Canopy Growth. It's a Canadian cannabis stock. So, a lot of people will kind of roll their eyes at Elliott wave, and I don't blame them because I think a lot of practitioners overcomplicate the thing. I keep it super simple. What I'm looking for in Elliott wave is this: a big dramatic move. That's clearly dramatic, from $5 to $35. Then I look for a correction like this into this Fibonacci retracement zone, 38.2 to 61.8. Now I can trade this correction if there's profit. But then after the correction, I look for evidence that the trend is heading up. High, higher low, new high. And there it is. And my entry on this one was here at 29.74. It's this blue horizontal line. So that was my entry price. Here's my stop. This red line is my stop, and this green line up here is my target. So I'm using Fibonacci extension lines to project a target zone. So that's all I'm looking for, is a big initial move, a correction, and then a continuation of that original trend. So I use a combination of Elliott wave and Ichimoku cloud. I got an indicator down here that's helping me see when momentum truly has shifted, from positive, then negative in the correction, and then back to positive. When I see everything line up, right, positive, momentum, higher highs, higher lows, above the cloud, above the moving averages, that tells me there's a pretty good chance this next move is beginning. So that's a quick overview of my charts and my trading method there. And let's see, keep an eye on the time. We don't want to lose track of that. We've got about 8 minutes. All right. Wow, we got more people logging in. Hey, welcome. Thanks for logging in. And we are going to be watching the FOMC announcement really closely here. Again, in about 7 or 8 minutes. And I just went over the trade setup that I'm looking for. But meanwhile, let's take a look. Ali was asking about UA. Under Armour. This was a pretty nice setup. I had an entry defined here at 1689. This is a corrective move. So I've mentioned before that you can trade corrections. So there's the impulsive move down. That's wave 3 and Elliott wave. And then pretty clear evidence of the correction beginning. High, higher, low, new high at 1689. Had a target zone and the Fibonacci retracement from here, 2284 to 3054. A little late to try and take this trade. This correction is going to end at some point up in here. That's a high probability. A little late, but there was a good setup, but not now. And BBZH. I'll get all into analyzing these charts and lose track of time. BBZH. Yeah, Ollie, I don't get data for that, so I'm not sure if that's on a different, if that's on a foreign exchange or something like that. Manal, I can pull up currencies. If you have a specific pair, I'm not interpreting your comment there. Meanwhile, Michael is asking, what do I think the outcome of the announcement will have on the infamous crypto market, if anything? Yeah, I don't know. I'm not following the crypto market other than to go, gee, I'm glad I'm not in it. Here's the Bitcoin futures listed on the CME, right? Launched up at about 20,000, pulled back, had a correction, and then as it started down, there was pretty good evidence it was going to continue down. Here it is at 6,300, less than half of its peak after the futures launched. And so, it's still too nascent for me to be interested in trading. Even the ETFs that were developed, the individual blockchain stocks, too new, too volatile. I want to let them mature a little bit. And I really don't have any insight on correlation between cryptos and what the Fed's doing. I really don't. I haven't looked into it. Pedrick says time to short crypto. You think it's not done, huh? According to this, it looks like on Bitcoin futures, right, an extension of that move and retracement would take it down very low, shockingly low. We'll see if that's correct. We do have a potential support down here. Okay, we got about 5 minutes till the FOMC release. And then, of course, there'll be a press conference, and, we'll probably see some volatility afterwards. TZA, Melton says. And it's important as I analyze these to realize that, everybody has their own approach to the market and to analysis and timeframes that they are trading. So TZA is small cap bear 3x. So this would be probably, the inverse of the Russell, and it's a 3x. So clearly, the Russell has been putting in new highs. This one's putting in new lows. No sign of it bouncing back up yet. Still putting in, you can tell when a trend changes. A downtrend is lower lows, lower highs, lower lows, lower highs, lower lows. You can tell it's changing when you start putting in higher highs, higher lows, higher highs, higher lows. And it's not. And I think trading these leveraged ETFs, these 3x, 2x, 3x things, is probably best done intraday. I would not hold them overnight. Bad things can happen, in my opinion. John wants to look at Baidu. I have another Chinese internet company that I'm more interested in, Baidu. Look how choppy this is. It was pretty nice, big impulsive move, but really over about the last year, this thing is swinging really, really wild. I like a little more orderly market, right? I'm not too excited about Baidu at this moment in time. We did trade this leg. This was awesome. Prior, it was good. We got about 3 minutes till the release. Okay, one more, Billy. That's an IPO. It doesn't have a lot of, at least on the U.S. markets, ADS, so it's probably a foreign company listed in parallel on the U.S. exchanges. It's off like a rocket ship, obviously, but not enough data, so I don't get involved in IPOs. I like to see a good year and a half's worth of data at a minimum before I get involved. Yeah, Dean, we're not going to have time to review the setups, but we'll do it real time as it happens. So let's get pretty dialed in here on the S&P 500 futures. Let's take this down to a pretty low time frame. I think we got 2 minutes left, GM. So here we go, 1 minute time frame on the S&P 500 futures, and we got about a minute or two before the release. And let's see what kind of reaction there is. And if the trade setup I showed earlier is there, I'll point it out and do some projection. It'll take a little time to form up. I definitely would not be holding intraday futures, either S&P 500 or gold, anything that's sensitive to the news. Wouldn't be holding that going into the announcement. Some people do. That's cool. Everybody's got their own approach. And GM says, missed my projection. Well, we don't have one yet. We got to see. There's a setup that I'm looking for, and it'll be in the recording. If I have a chance, I'll repeat it. But we want to pay attention here now. And if anybody sees, I might be watching the chart. If anybody gets the the news flash, go ahead and post it in there so we can see. Well, there was a reaction. Look at that. Wow. Look at that wick. So Jeremy says they raised rates 25 basis points, so that's as expected. So that was from 27.92 to 86. So that's a 6-point instantaneous move at the news release. So that is our initial move down. They dropped their neutral language. George says it's a head fake. Gold did the same thing. Down. Yep, there it is, gold. Gold took a momentary dive as well. So this move here is a bit problematic. Here's the initial move. The retracement is going a little too high. It's going up to 76.4. If this current bar closes, so the wick's up there, if the current bar closes up above there, then the setup I showed is going to be nullified. But let's see. Let's get a few more price bars on here. Nope, Sam, do not have the setup that I was looking for yet. .6E is way down, says Dean Anthony. That's the short-term bond fund, is it not? Euro. Don, if there's a little bit longer term setup on the FOMC, yes. Earlier in the year, I took one in a session like this that lasted, you know, into the next couple of days, and we did super well on it. What was that FOMC trade like? It was marvelous. Let me see if I can find the details here. Yeah, it was back in February, right after the FOMC announcement. I believe this was it. And we went short on the SPY using 278 April put. And in a day, we knocked out some pretty nice profit. So we did have this retracement. So Ahmed, or Aniz, we have this trading room Monday through Thursday for an hour and a half in the mornings. And then, yeah, we trade stocks and options. We're not day trading, but we take longer term trades, and I'm going to show some of those in a minute. So that move there wasn't really all that spectacular, right? It was about a 6-point drop. It retraced. We're already in the target zone. So I wouldn't be trying to take that trade. So there was a reaction, there was a retracement. It wasn't big enough intraday, I think, to get excited about. Hey, Anise, you were asking there. I just sent you a link there. So Chris is saying FOMC moved less than expected. They did what was expected, 25 basis points. And, you know, is this why the market's doing what it's doing? Yeah, I don't get too deep into why. I mean, we can look at the news, you know, trying to peer into the craniums of hundreds of thousands of traders. I focus on the reality of what actually is happening. Like I said, in the setup, if you were here, I talked about previously being a fundamental trader, which is really trying to explain what should happen, right? I found it to be very frustrating, so I just trade what actually is happening. And I think technical trades, technical trading, you know, price action is reality, and patterns in price action can give you some pretty good insights, a good probability of what's going to happen next. VIX moved, I'll bet it did, John. So gold took a bit of a hit, as did oil. Usually oil is not sensitive to the Fed. It could be just doing its own thing. Let's look at a couple of ETFs that are definitely sensitive to the Fed. Let's look at TLT, which is the iShares 20-year plus Treasury bond fund ETF. We traded this leg of TLT down earlier this year, did real well on it. We might be going short again if there's enough profit. We want to see it break the Ichimoku cloud first. So no trade set up yet, but there could be. If we take out this low under the cloud, about 118.25, there might be a nice short coming in on TLT. Let's look at the dollar. So it's funny, everybody talked about how much the dollar was up in the last few weeks. And you got to look at the big picture. Look how much it was down over the last year and a half. It looks like the dollar could be continuing to head down to some new lows. Not today, obviously, but we got a low. If we get a lower high, new low, we start breaking the cloud here. There might be a short on this dollar from DUP. Not there yet. Not there yet. Well, I think the reaction, you know, to the Fed so far was a bit of a bust. In terms of finding a trade on that intraday, oh, got a little action now. Not looking all that great. Let's look at a higher time frame and see if there's a pattern setting up here. Let's get rid of these lines. So let's watch this on so I'm looking at a 30-minute chart. So this thing's been heading up, kind of slowly going into the FOMC meeting. So let's watch this level here. If we start taking out these lows, this could be a change in trend in the S&P 500, and we could be looking at a correction on the order of down into this retracement zone, 27.55 to 27.31, call it. So if it does this, if it breaks this and has a nice pattern, that could be tradable, and I would go trade that with the SPY. And because futures, I definitely would not be holding futures overnight. And this trade probably going to take a handful of days to play out. We can trade this on the SPY. So let's look at SPY on that corresponding 30-minute chart. So this doesn't quite have the same data resolution that the futures does, because it doesn't trade around the clock. Make sure I got this right. Oh, there's some missing data. That's what I thought. But if we take that same retracement, so we could take an entry down here as it breaks the cloud. We would put a stop up here at this current high, and that would give us a target zone. Get my green line. Let's call it the middle of this retracement zone. These blue lines are the Fibonacci retracement zone. So we could take an entry at 276.98 and get a target down here at about 270 on the SPY. That wouldn't be too bad. I'll take a, 7-point move on the SPY. That wouldn't be bad. And you could just short the shares if that's your thing. I kind of like options. I have a very specific approach to options. And this is going to be a short-term trade, probably in it a week at the most. So we can take a mirror term. I'll show you the contract I like. And it may not be the one you like. Everybody's got their own thing, right? But when I trade directionally with options, this is a directional trade, and it's not ready yet. I'm saying if price gets down to this 276.98, then I think we got a good short trade potential, right? When I go directionally, I just go long. I go long the puts. I know people like spreads and all other manner of winged creatures, and that's fine. There's more than one strategy to trade options, it's for sure. I would take that July contract. It's got 37 days left. I would want to be out of it when you get inside that 30 days, but again, I think this trade's going to take a week or less. I like going deep in the money, high delta, and there's a very specific reason for that. We're looking for a directional move, and the only way you make profit on long positions is with high delta. You have to pay for it. We got well, the open interest on these is amazing. Right in here, this 287, 288, these are pretty nice. You got a delta nearly 80, 78. So yeah, the 288 looks like a good one. So I would just buy this 288. This is the July 288 put for SPY. And by the time this trade triggered, if it triggered, our delta is going to be over 80. So that would look like a good one for me. So there wasn't an intraday setup, wasn't that exciting, but there is a longer term potential trade. It's not qualified yet. I want to see it make this new low here. And then again, the target would be down in this retracement zone. So there's something. I said that I would share a couple trades that have some good potential now, and then I'd be happy to look at any more that you guys might be interested in, offer my opinion there. So I mentioned we're in Canopy, we're in profit, and this one still has plenty of potential. The way I annotate my charts, this light blue line is my entry where I got in, the red line is my current stop, green line is the target. So the reward to risk on this, it's just the ratio, the distance from the entry to the stop versus the distance from the entry to the target, right? It's like 2 or 3 to 1. So that's pretty good. New entry is still possible. Things taken off. And I'm trading that with an option contract. You can buy the shares. That's totally doable. Oh, wait. I bought the shares only. There wasn't, at the time we took that, it had just been listed on the New York Stock Exchange. They didn't have options yet. So we just we just bought the shares on that one. Yandex is another one that we just got in on the 7th. This one looks pretty good. So they call it the Google of Russia. So it's a trend continuation. There's the initial trend. There's a perfect correction into the Fibonacci retracement zone. We took our entry at 35.27. We're in some profit. Stop 33.98. Target is $49. So and that one did have an option play, and I liked the November 30 call. That we want to have plenty of time on that trade to play out. We want to be out of it. You know, we're not going to exercise it. We're not going to hold it to expiration. You know, you hear people talk about option buyers lose money. Yeah, if you buy the wrong contract, if you let it expire. I don't know, we're in 20.83% profit. It's barely gotten started. So Al, I would go look if I were going to do options on Canopy. We can look, see if they got a market going on there now. There we go. Maybe they didn't. We'll be taking the Octobers on that one. And of course, we're trading it. Yeah, it's there. So probably we'd be looking at the $25 call. It's got a delta of 75. Yeah, and there's some open interest now. So yeah, you can do that as an option. Yeah, Milt, I think you're right, Milton. Flat wins in terms of the market reaction to the FOMC announcement. Let's go back to a smaller time frame. Yeah, we could call this flat. It didn't even put in a new low there. So that SPY trade that I talked about certainly is not qualified yet, unless it reverses and continues down. No, yeah, I absolutely prefer. I want to be deep in the money, high delta on my options, and I want time. I want to be out of the option contract well before we get into the last 30 days and some theta decay would set in. So yeah, farther out in time, but you know, not so far that you overpay for the thing either. So I typically look, you know, about 100 to 120 days is the sweet spot. All right, hey, what symbols were you guys interested in? I'm definitely happy to take a look if you got some. My default setting for stocks is daily chart, but if there's a different time frame, go ahead and type that in. I'd be happy to do it. Twitter, I don't want to look at Twitter, Jack. It's painful every time I do, but I will. And the reason it's painful is in my trading room a couple of weeks ago, I said, hey, here's a good trade. And then for whatever reason, I didn't go take it. And a lot of the traders in my room did. They took it at 34.21 and it's sitting up here at 43. It's a stunning winner right into this target zone we had predicted. And I just kind of took my eye off the ball, forgot about it, but they didn't. So congrats to the people who took it. It was a stunning winner. Wow, too late. I would not chase it. And after a parabolic move like this, pretty good chance it's going to correct, at least momentarily, and if it's going to head back up. John would like to look at BABA. I've traded BABA before. I liked it. We caught this move up here. It looks like it is, it had a nice correction, got really close to the Fibonacci zone. The rules were met for a wave 4. So it looks like it's going to continue up. I would wait for a new high up here at about 211.59, and if so, then it's got a nice clear shot at the target zone of 239 to 285 in between these green lines. That looks pretty good for BABA. CB for Mark. Chubb Group. So it's not a very orderly market, is it? This thing swings pretty wildly. It did have an impulsive move up. It's got a deep correction. The next move you'd be looking for, and it's got some support down here, would be long. But it's not quite ready yet. You want to see it break above the cloud up here about 138, call it on Chubb. Ollie, Riot Blockchain. That looks like a getting ready to continue. Again, this one's pretty volatile. Swings wildly, so you want to take that into account. But this bullish move happened, and we had a perfect correction. So you'd be looking, I'd go ahead and let that get up above the 200, up to about 18. And then you got a target on this. up around 24 to, call it 30. So that's not too bad. I would wait for it to qualify up there. Adobe got earnings tonight, so I wouldn't trade into earnings, but after can be good, after you see what the reaction is. You know, what a marvelous trend for Adobe. That's just nothing but straight up. I would definitely not try and chase this, even if it goes up farther. You know, all trends end, and these are losing momentum. See how these are getting smaller and smaller? So I'd be interested in a correction if it started, but that would take more than just one price bar after earnings as well. Noel would like Google. You guys are, I'm not sure I'm going to be able to get everything. So Google, nice run up. It is showing signs, right? Low, lower high, new low, lower high. It is showing signs of absolutely losing momentum and being ready to correct. The problem is, by the time you get proof of that correction, see, not all corrections are profitable, have sufficient profit potential. So I definitely would not be going long on Google at this time. And by the time you've got some evidence of a short forming, a correction forming down below the cloud, 1040 down to the top of here about 8. Yeah, so there may be a short setting up. It's got a high here, I would not go long on it at this time. Even if it puts in a new high, you know, how much legs does it have left? You know, it's an awfully mature trend. Man, I'm never going to catch up. Hey, thanks, George. Thanks. CGC is a cannabis stock trade that we're in. It's Canopy Growth, Canadian cannabis stock. We're in it, and I think there's still some, I think it's just getting started. I think there's some good profit potential on that one. Yeah, you bet, Noel. Iqbal says, Exxon, insiders bought a bunch of shares, huh? Well, it's a terrible chart. They may know something. It's popping up, obviously. This big gap here is worrisome. This could be significant resistance. So I don't really like them when they got these big gaps all over the place. So we'll worry about that. We'll worry about that one. So I wouldn't be taking that trade. Let me show you. I always have a watch list out in front of. I got, you know, at least 10 trades. I got 11 on my list here that I'm watching, waiting for a good setup. One that I like that we're not ready for yet is Tencent, Chinese internet stock. So it's currently at 52.87. My entry would be at 55.03. So here's the big move up. Here's a nice correction. Now clear evidence, higher high, higher low. It was breaking up above the Ichimoku cloud. We got positive growing momentum. It's above the 200. If it were to put in a new high at 55.03, I would like a long on Tencent up to up above, call it 74 bucks. So that would be a nice potential. I'm not going to take it though till it makes that new high and proves that this next move is starting to happen. And there's no options on Tencent, so you just have to buy the shares. So there's a couple ideas. So again, the Fed thing was a bit of a bust. Not much really happening here. Had an initial move down. It's heading back up. It's down now. I did show you, if you weren't here, I did show a SPY trade on the 30-minute chart. I'll review that real quickly. We'll get ready to wrap up. So the SPY trade on a 30-minute chart. If we break down and get down below the Ichimoku cloud on a 30-minute chart at 276.98 would be a decent entry with a target at 270.18 and a stop up here at this high at 279.60. All right. GM's been a mess. Lonnie, let's look though. Well, it's taken off now, isn't it? big gap up, must have been earnings or some good news. Almost at the target zone now. So, you know, by the time it gapped, right, we didn't see it coming. We would have liked an entry, you know, as it broke the cloud or broke to 200. Now it's pretty close to the target, and I don't like to chase them. I just don't like to chase mature trends, right? You bought a put now up here. You may get a pullback after this parabolic move. I don't know how big that would be. Yeah. Okay, well, we went through this stuff. You know, just want to share a couple thoughts with you. I've learned over the years to be a consistently profitable trader. I think these three things are essential. You got to have great trade setups. I've shared some of the broad strokes of what I'm looking for. You got to have, you know, high probability outcomes. You got to have it better than even odds of your trade winning, and you got to have reward to risk ratio. I've talked about that. That the trades have to have a bigger potential in their win than they do in their loss, and you know what that looks like graphically on a chart. If we go back to one of the ones that I liked here, Canopy, for example, great reward to risk ratio means that the distance from our entry to our stop is a lot less than the distance from our entry to our target. Got to have a big profit potential relative to the risk of the trade. And so you got to manage risk. You got to, you know, recognize that every trade can lose and be prepared for that, and have the loss only be an acceptable level. And you got to have a way of managing the trades. Once you're in it, where are you going to take profit? Where are you going to get out? How are you going to get the max profit out of it? I think any trading system, regardless of your indicators, your setups, got to have all these things included in it. I've looked at some live charts. I've showed you some favorite trades. I've looked at some of your charts. And again, I think these things are essential. And you guys agree with that? You agree that having great setups, great risk management, great trade management are essential to being successful? You can type in yes and raise your hand there. There's a little raise your hand button. Yes, indeed. Okay, everybody's agreeing. Good. I've learned that, and I've learned some of this, you know, in red ink, you know, the painful way. It's been reinforced for me very strongly. So, were you excited about any of the trades? I showed you some of the trades I'm in right now, a couple on my watch list. We looked at a couple you were interested in. Hey, thanks. Thanks, Shiv. I think we got some good potential ones. So you excited about them? Maybe I'm unsure how to act on them, right? Maybe you feel like this guy here. It's like, that was a ton of information. I'm not really sure what to do next. Hey, Michael, thank you. Only I can see your comment, Michael. If you change the address bar to panelists and attendees, then it's a public comment. So I'd like to just spend a minute or two going over a special offer on, you know, for my service that I talked about up front. And again, great trade setups, great risk management, great trade management. You know, what does that kind of information work? Well, the pick service, you know, last year, if you had a $100,000 account, it returned about $1,900 a month on average through the year. You get 6 hours of detailed trade consultation through our live trading room, through a Wednesday night chat that we do. That's really valuable if you're going to book time with me or any other, you know, successful expert trader, right? It's going to cost you some money to have consultation, ongoing education on a daily basis. Yeah, it's going to be, you know, $4,300 worth of training and trading information, right? So I'm going to offer all this to you, and it's not going to cost you $4,300. What I offer is I do have a stock option pick service where I send out alerts for the trades I'm taking, and then updates on those trades as they happen. And I've got a live trading room Monday through Thursday, an hour and a half in the morning. You can take a 30-day trial on that trading room and the pick service. They're bundled into one service. You get both. Even if you can't attend the trading room, you're going to get alerts on the trades. You get 30 days for $37. 100% money back guarantee, no questions asked, no hard feelings if it's not a good fit for you. So let me go ahead and post that link for you. Hey, thanks, Michael, for your comment there. Yeah, Doug, how often do we send trades out? We're taking about 1 to 2 trades, maybe 3 in a week. And so, you know, we send out an alert when there's a new trade, and then alerts when there's changes. We're going to move a stop or take profit or do something like that. Typical alerts, let me show you what they look like. You get email alert, and you can get, you can sign up for SMS text, to your phone if you are in North America. The text service doesn't work outside of North America, but let me just show you what an alert. We sent one out today. So, just simple email says, hey, on TEVA, we're taking profit, first third of the position. Tahoe, we're moving the stop. That's what it looks like when we get a new, just changes to trades. And see if we got one for a new trade. I don't want to bore you with. So you get an email that says, hey, new trade, here's the entry price, here's the option contract. If you want to trade it that way, you can follow along with, you can trade either shares, your choice, or options, right? Doug, well, thank you, nice compliment. He says, never used Ichimoku charts. Can I learn that in the first trial? You'll see me use it. You'll see me use it. You can certainly ask questions during our live chat or trading room, right? To really get into my method, I do offer a low-priced course that just goes through all the settings and the theory and all that kind of stuff behind it. But you'll see me using it in the trading service, right? And you watch long enough, you're gonna, you'll pick it up. Jeremy, yeah, you absolutely get text alerts if you're in North America. Lonnie says, feels a need to trade too often. Yeah, you definitely want to, be measured, right? It depends on the time frame you're trading and how much time you have and all that kind of stuff. Let me go ahead and post that link again. Yeah, 30 days, give it a shot. See if it's a good fit for you. And, 100% money back guarantee. Most people stay. Most people find it to be a valuable service. Everybody's got their own opinions about trading services and trading methods. So it's not a perfect fit for everybody, but it's a pretty low risk way to give it a shot. And let me show you the trades that we're in right now. So this is pretty typical. We got 10 open positions. We typically have 8 to 10 open positions. And again, complete transparency. I'll show you the price I got in at, what our current stop is, what the current P&L is. So if we're trading just with shares right now, again, your choice how you trade. I'm going to tell you how to do it. I tell you what I'm doing, and I'll answer any questions. But here's the P&L on the current open trades, right? And we got to be realistic. Not every trade wins, and not every trade is always in profit. But on the shares, here's our current. I got some of my current customers in here. They can testify. This is real. This is what we're doing right now. These are trades that I published as I took them. So what's the current P&L based on a $50,000 account size for shares? Just about $1,000. Snapshot in time for these 10 trades. And if you were in them with options, if you were taking them that way, then it would look like this. $1,900 in profit if you were trading with the options. There you go. See that comment from Shiv. Very nice. Daryl, stops are based on the underlying shares. And I provide some training videos. If you're going to trade options, there's some nuance about how you manage the stops and how you do the position sizing and risk management on options. And I've got some PDF documents and some 2-3 minute videos that show how to do that. The stops are always based on the underlying shares, and then we calculate the risk and how to exit the trade. Yeah, Chris, that was these numbers are $50,000 account. All right. So Jack, yeah, we're looking pretty good. We're looking pretty good. I think we're nicely balanced, right? Nicely balanced. We're not all overloaded in one sector. So regardless of what the market does, we got a pretty good chance. And we're not highly correlated to the S&P 500 either. So pretty good deal. Well, that's really what I had prepared for today's presentation. Again, you know, you can try the stock and option picks, the trading room. It's a bundle of services. If you don't have time, you got a day job, you can't go to the trading room, you can still benefit. You're going to get alerts on the trades, either to your email or to your cell phone if you want a text alert. Lonnie's asking what dollar amount for 50,000. I'd have to calculate. I'd have to calculate the shares versus the entry price. And we have I provide a calculator, and we have risk management tools. So we get in. I have a calculator to help determine how many shares to buy based on your account size. So if it does lose, we don't lose too much. Right, and it also limits any position size to no more than 15% of any given trade, of your trading capital in any given trade. So with 10 trades, we're probably getting close to being fully invested. If you were using the options, of course, it's going to be less capital tied up because it's. So I would imagine that we're close on these 10 trades, pretty close to the 50K being tied up in trades. Not so much on the options, and some people take a blend. Michael is asking, do I believe you could trade full-time with a $40,000 account? You could trade full-time. You know, maybe your question really is, could you make a living on a $40,000 account? I think you have to be realistic. And so if I show you my annual returns, so I'm averaging, you know, high 20s to 30% per year if you average this. So you ask yourself, if you were to match my results and make, you know, call it 30% per year on a $40,000 account, would that be enough for you to live on? Right? And if you got to withdraw money, you know, if you got to take distributions out of your account, then it's not going to grow as the way it would if you left it in, right? And then had gains on top of gains. So there's plenty of people who will tell you, Michael, that you can take $5,000 and turn it into a fortune and make a living. It's nonsense. I think you got to approach the markets with a realistic expectation. So yeah, Lonnie, yeah, I do think you're way off. I do think you're way off. If all these option positions, if we were to add them up, it would be, I'll do the math for you. I got nothing to hide, you know. So the capital in the option trades would be 12,950. In a $50,000 account. All right. Okay. I'll post that link one more time. Oops, I just posted all that spreadsheet stuff. That wasn't the goal. And so again, if you can't attend the live trading room, you can still participate in the PIX service because we do send out alerts, and we do have a live chat session every Wednesday night. So we got one tonight, 6 p.m. Pacific, 9 p.m. Eastern. So you can log in, get an update on the trades, answer any questions you might have, just interact and get an update. All right, well, hey, any final questions before we go ahead and wrap this thing up? I'm here. I'm happy to field any questions, about my service and how it works. Chris, are you fully invested versus cash? Again, it depends, Chris, if you're trading stocks or options or a blend. So it's a different answer for everybody, and it depends on market conditions. We try to be in, have the money, the trading account, invested. But we always want to have some reserves when the next great trade comes up. We got some capital available that we don't have to maybe liquidate a trade that we don't want to. Right? So we try to keep some capital available for great opportunities and balance that with keeping the money at work for us. So it fluctuates. We close trades based on the realities of the market, not arbitrarily. And so how many trades we have, how many opportunities when we're closing trades is quite often driven by market conditions. Yeah, I personally trade mostly options, and the reason I like it is capital efficiency. And you can control risk. You can actually control risk better with options if you have a good strategic approach to it. So if a trade's going to lose and you're trading with options, you actually lose less cash. And if it's a winner, you're going to make really, really nice gains on that. And you tie up typically about 10% of the capital in an option trade that you would in a stock trade. That fluctuates, right? Depends on the price of the option, the price of the underlying shares, all that stuff. But just leverage and efficient use of capital, lowering risk. And I'm strictly directional. I don't take spreads or butterflies or condors or anything, right? I do. I analyze charts like you've seen demonstrated, come up with, hey, is this thing got a probability of going up to some target or down to some target? And then, buy a put or a call, depending on the direction. Michael, I do not have a lifetime, but I do have an annual option. So if you take the trial, there will be an offer during that checkout process for a very compelling annual subscription to the services. Lonnie, yeah, it is recorded, and everybody that registered, I'll be sending out a link to the recording. It takes a few hours to get it rendered and posted and stuff. Yeah, you're totally right. You're totally welcome. Stephen, you got a $10,000 account. Can you take the alerts? 10,000 is the minimum. If you look at the FAQs on my homepage, there's a link there. 10,000 is the minimum I recommend. To where you could, hope if we continue with the historical returns to make a return on top of the fees for the service. So yeah, 10,000 would be the minimum. If you take the annual offer, I mentioned, if you sign up for the trial, you'll be offered an annual. That's going to cut your cost pretty dramatically, and that'll be better for you, a smaller account in particular. Hey, Nancy, you are welcome. Glad you could show up. I hope to see you in the regular trading room, Nancy. Take the trial. We'll see you tomorrow morning. Lonnie, well, I'm always happy to exceed expectations. That's the goal, right? Okay, well, I think I'm going to wrap it up. Looks like the questions are slowing down. I do, once again, sure appreciate everybody showing up, spending your time. I hope, just like Lonnie, I exceeded your expectations, that you found it to be valuable. And at a minimum, you walked away, hopefully, with some trading ideas, some new information about a trading approach you want to consider. And I'd love to have you take a trial and try the service out, and see you in the trading room and in the PIX discussion tonight. We will be instantly granted access, and love to have you just share in the success we're having here. All All right, thanks everybody. Going to go ahead and wrap it up. Hey, trade safe, whatever method you use. Be careful, they are out to get you. And keep your winners big, your losers small, and above all, have fun. Trading should not be stressful. If it is, something's wrong. All right, take care. Bye-bye.